Hello, welcome, and thank you for joining us for the launch of our new international strategy for the financial and related professional services industry. For those of you who don't know me, my name is Miles Selleck and I'm the Chief Executive of the City UK. Our international strategy represents the culmination of months of work. It draws upon insights from more than 60 interviews from across the industry and among key stakeholders, and it is informed by a breadth of experience and years of work on the issues that it covers. It sets out our industry's commitment to work in partnership with government and with regulators to make the UK once again the world's leading international financial centre, and to do so within 5 years. The UK is already one of the world's leading international financial centres. Our industry employs more than 2.3 million people across the country, 2/3 of whom are outside London and the M25. It attracts significant inward investment and generates vital tax revenues that fund critical public services. But now is the time to build on this achievement, to sustain our success, and to reach for the prize of being the world's leading international financial centre again. If we succeed, our industry will create even more high-value, sustainable jobs, develop new skills and parts of the economy, and drive investment across every sector of the UK's economic activity. The City UK may have written this strategy, but we didn't produce it by ourselves. We engaged in our largest ever consultation exercise, drawing on the commercial insights of our member businesses involved in our international work streams. Moreover, it has benefited enormously from the insights and perspectives from our key partners at the City of London Corporation, among the financial services trade associations, and through the International Regulatory Strategy Group, the joint venture between the City UK and the City of London Corporation. And as we developed our strategy, we discussed our emerging thinking with ministers, with senior officials, and with leading regulators. And we're delighted that the government shares so many of our ambitions and views. Our industry is united behind this strategy. We're ready to get to work to make the UK the world's leading international financial centre. And we're eager to partner with government and with regulators and all our other key stakeholders to deliver on this ambition. Very shortly, Edward Braham, the chair of our International Trade and Investment Group and partner of Freshfields, Bruckhaus, Deringer, will provide you with an overview of the strategy. And I'm delighted that after that, the Right Honourable Greg Hands MP, Minister of State for Trade Policy, will then deliver our keynote speech, discussing how government trade and investment policy is strengthening the UK as an international financial centre. And I'm particularly pleased that after that, and after the Minister has spoken, Catherine McGuinness, Chair of the Policy and Resources Committee of the City of London Corporation and Deputy Chair of the City UK Board, will then moderate a panel discussion. This has a fantastic lineup of senior representatives from government, industry and academia who will discuss how to strengthen the UK's international competitiveness. The panellists are Glen, the Economic Secretary to the Treasury, and I should take a moment here to congratulate John on becoming the longest serving minister in that post since it was created. Lord Mandelson, Chair of Global Counsel, Dr. Swinburne, Vice Chair, Financial Services at KPMG and Chair of the International Regulatory Strategy Group, and Dr. Yueh, Fellow in Economics at St Edmund Hall, Oxford University, and Adjunct Professor of Economics at London Business School. It's hard to think of a better qualified group of people to discuss the report and the challenges and opportunities that it addresses. I hope that you enjoy today's event and take some time to read the strategy. And now, without any further delay, it gives me great pleasure to hand over to Edward Braham to run through the strategy itself. Edward, over to you.
Thank you, Miles. For those of you who don't know me, I'm chair of the International Trade and Investment Group at the City UK, and I'm going to give you a brief overview of the strategy which we're launching today. I'm going to start by reiterating something Miles said just a moment ago, which is this is very much an industry strategy. It may have been coordinated and written by the City UK, but it is an industry strategy, and it's been developed in partnership. That's partnership with members, trade associations, regulators, officials, and some ministers. There have been more than 60 one-on-one interviews and innumerable further discussions where we've tested and refined the ideas, and it's now in the form it is, and you can access it on the website. And as Miles says, I really do encourage you to read it, because there is some real granular detail in there, which is going to be of lasting value, I believe. I can't thank everyone for their contributions, but if I could just pick out a few who have been particularly helpful over prolonged periods. Starting with the ABI, AFME, the Investment Association UK Finance, also Deloitte, BCG and KPMG, officials at the FCA, and at Treasury, Department for International Trade, BEIS and DCMS. It really has been a tremendous joint effort, and the result is all the richer for it. This is a very ambitious, growth-oriented framework for the industry's future international engagement. The goal is bold. It is to be the leading international financial centre, and to do so within 5 years. Now, while that is ambitious, I also think it is realistic, because it's not very long ago that we were the leading international financial centre. And although we've continued to grow, our competitors in Asia and the US in particular have grown faster than we have. So what we now need to do, if we're going to achieve our goal, is to outcompete our competitors. And I think there are three things which are going to make that possible. The first is about winning in the areas of future demand. And there are 4 key areas which have emerged from this research and which have underpinned our thinking. And they are technology and data, sustainability, international investment, and risk management. And I'll come back to those. The second thing which is going to be key is industry, regulators, and government continuing to work together in partnership. As Miles said, this is the biggest consultation exercise the City UK has ever done, and it's also been incredibly rewarding, and we want to keep that going. And the third is what I think of as a winning mindset. You know, we're at the time of the cycle. We've had the Olympics, the Paralympics, and I think whether in sport or in business, there's a particular mindset you need to win. And at this level, you win by being seen to be better. This isn't about cutting corners, and it's not about lowering standards. It's about being seen to be better and being the place where people want to come for services. It's about clarity of vision, and it's about focus on execution. And thinking at every stage, how is what we're about to do going to help us achieve our objectives, or alternatively, make them more difficult? And then to give due weight to whatever the answer is. And if we can get this winning mindset right, a lot of other good things will follow. So to summarize on that, 3 key things to help us win. The first is keep our focus on the key areas of future demand. The second is keep working together in partnership. And the third is keep and develop that winning mindset. So we've looked at this through a number of lenses, but one of the ones which we found particularly helpful was this 3-tiered approach you have on the slide. The secure level is foundational. It's really important, but it's certainly not the whole story. And I'll go into it in a bit more detail in a moment. The grow level is about doing things better in areas of existing strength. Everyone should be doing it. It's really important, but ultimately, This level tends to be incremental, and it is unlikely to achieve a change in the pecking order. And the third and perhaps most important of the three is the build level. And these are the areas of future demand I talked about. These are the areas where you've got developing markets with absolutely everything to play for. And if we get it right, it is capable of being transformational. There are two further observations before we leave this slide. The first is that we need to do all three in parallel. You can't just focus on one and not do the other three. And the second is, as we tackle those two levels of secure and grow, we need to keep in mind those key areas of future demand, because that is what will set up the infrastructure which will be most valuable for the future. So if we move on to the next slide and dig down a little bit into the first of the three levels, the secure level. As I said, it's foundational. And the slide picks up four key issues. The first is about attracting global talent. The second is about strengthening market infrastructure. The third is about aligning tax with the need to promote inward investment. And the fourth is adopting a more dynamic regulatory approach that builds trust and respect around the world. If you go to the report, you'll find there are 7 areas in all, and each of those has objectives split into short, medium, and longer term. And we've prioritized all of that based on effort and reward, always wanting to spend more time and more effort on the things which have the highest reward, even if they're not so easy to do. So if we move to the grow level, there are 3 issues on this slide, but again, actually, there are 7 in the report. The first is about liberalizing trade. The second is about strengthening regulatory coherence. And the third is about mutual recognition of qualifications. And as I said, these are all about doing better with things we're already very good at. And there are 7 issues in all in the report, broken down and prioritized in the way I described. And if finally I move down to the third of the levels, or up to the third of the levels, which is the build level. This is based around the 4 key areas. So take them in turn: data and technology. It's about making the UK a global hub for financial and professional services, data and technology. Go to sustainability. It's about being a world leader in finance and advice. Go to international investment. It's about becoming the leading gateway for international investment. If you turn to risk, it's about becoming the global center for risk management and risk advisory services. So if we move on, as I said, there is a lot more detail in the strategy paper, and I do encourage you to read it. As we work together to implement the strategy, there's of course going to need to be many more detailed discussions, topic by topic, and I'm hoping that you will respond as we go through that. On our part, we're organising around a work plan that will allow us to coordinate the overall implementation and provide government with technical expertise that is needed to advance the recommendations. So thank you. If you just take down the slides. The goal is undeniably ambitious, but the strategy is clear. And I think now it is time to bring it to life and to deliver on it. For my own part, I'm confident we can do that. And there are 4 key reasons for that. The first is, as Miles said at the beginning, industry is united behind this. The second is that we have a good collaborative way of working with industry, government, and regulators in partnership, and we're well capable of taking that forward. The third is that what we're proposing is good for the UK in terms of jobs, skills, and inward investment. And fourth, and perhaps this is most important of all, because ultimately we're in a service industry. What we are proposing is what I believe that the UK's customers and clients around the world are looking for. And ultimately, our job is to serve that demand as well as to generate it. So it is up to all of us now to carry on working together in partnership and to deliver on the strategy and the opportunity that lies before us. And with that, I'd like to hand over to the Right Honourable Greg Hands MP, who's the Minister of State for Trade Policy, and who, as many of you know, knows the city very well indeed and has been working incredibly hard to promote the UK all around the world. Greg.
Right, well, thank you, Edward, and thank you for that kind introduction. I hope my audio and visual quality are working, but thank you to the City UK for inviting me to speak today. And I welcome this excellent new strategy document, which sets out bold proposals for turning the UK into the world's leading financial centre over the next 5 years, or some might say actually maintaining the UK's position as the world's leading financial centre. It is notable, of course, that it has been written by business leaders and key stakeholders across the city and sets out a collective vision from the sector. Central to this is its call for a liberalising trade and investment policy agenda, which you, Edward, have just been talking about, with government and business working side by side to capitalise on future demand in areas such as data, technology and green finance. And I'm pleased to say this government not only wholeheartedly supports these recommendations, but has also been putting many of them into action as we work to bring down barriers to trade and open up new markets for British businesses worldwide. And we are following in distinguished footsteps. I remember back in 1986, when I was at university, the same liberalising instinct that drove Nigel Lawson to deregulate the city back then, ending fixed commissions, enabling mergers and takeovers, and opening London's market to international banks and to international finance. It's long been the case that innovation is the key to the city more broadly, its flourishing and future prospects. And back in 1986, this set financial innovators free to flourish and injected fresh energy into the system, forcing firms to become more nimble, more responsive, and more competitive as Britain became Europe's undisputed financial hub. Now, as you know, Lawson achieved this economic alchemy while managing the expectations of a rather demanding boss in number 10 Downing Street, which I have to say is no mean feat. And today, as nations worldwide reset and recalibrate in the wake of COVID-19, the need for greater trade liberalisation across the global economy has never been greater. We are building on solid foundations, with UK exports of financial services showing resilience despite the pandemic, growing by 0.7% in 2020. The key point there, the key word there is growing, with exports of insurance and pension services, for example, increasing by 8.5%. Britain remains the world's second largest exporter of financial services, worth £61 billion in 2020. And we are home, of course, to Europe's largest insurance and asset management industries, together with being Europe's top fintech hub, second only to the US worldwide. And again, I welcome your aspiration to become or remain the global number one, depending on which of these different fields we're looking at. We recognize the challenges businesses face and are determined to help many more firms to harness their trading potential. We are using our seat in global fora like the G7 and the G20 and our newly regained independent seat at the World Trade Organization to secure advances in areas such as e-commerce, services, domestic regulation, and digital trade. And we are opening up new opportunities for business, including for financial and professional services firms, through striking advanced free trade agreements with our global partners. So far, we have agreed deals with 68 countries plus the EU, securing trade worth £744 billion as of last year. And we are not only aligning ourselves with some of the fastest growing markets in the world, we are also targeting the industries of the future. We know that 65% of services exports were delivered remotely in 2019, and that by 2050, it is expected that 50% of global trade could be digital. So securing ambitious, advanced financial services and digital provisions in our free trade deals is key, particularly for a country like the UK. 80% of our economy is services, and that means that we will have a strong interest in making sure that services sectors are well provided for in our free trade agreements, which we couldn't always do in the European Union. The historic FTA we signed with Japan in 2020, for example, goes beyond the existing EU-Japan deal with enhancements in financial services, digital and data, providing fresh opportunities for growth with a key market worth £3.1 billion in UK financial services exports last year. But let's focus on now on our negotiations with Australia. Our two nations announced an agreement in principle in June and look forward to signing the deal later this year. This agreement deepens access for our services exporters and creates fresh opportunities for our tech industry. It includes an ambitious financial services chapter and establishes world-leading terms for closer regulatory cooperation. I think back, I mentioned earlier the Big Bang in 1986-7, and most sort of popular memories, there'll be some in the audience who will have been participants at that time. I remember the US firms increasing their UK and London presence, but actually the Australian firms did just as much at that time. So our consultation with financial services stakeholders demonstrated that focus on the regulatory cooperation was an industry priority. And we have achieved our ambitions in this area by establishing a regulatory cooperation framework, which will strengthen the relationship between our respective treasuries. But this deal presents even wider opportunities for businesses. Crucially, it contains ambitious and modern provisions that deliver for the UK's world-leading services sector by liberalising trade and deepening market access, make it easier for companies to do business and for professionals to operate in each other's economies. This will include providing full market access for all UK and Australian service providers. The deal commits both countries to ambitious digital provisions, which will increase business opportunities whilst ensuring world-leading standards for personal data protection and modern rules for digital and data flows. The deal will go further on investment than any previous trade deal Australia has agreed, locking in transparent and stable rules and removing potential barriers, and make it easier for UK businesses to set up shop across Australia, ensuring they have access to opportunities at both state and sub-federal level, particularly in procurement. Increased mobility is key, and we are finalising a package that will make business travel smoother, agreeing clearer, less restrictive rules, and working to secure provisions to enable the recognition of UK professional qualifications across a range of sectors. Now, I say all that with some detail, not just because Australia is an important market in its own right, but looking together with the Japan deal last year. So these are the first two independent UK free trade agreements. I think we'll see where our direction of travel is and where our key priorities are for the UK going forward in our future trade deals elsewhere in the world. Unfortunately, I don't have time today to tell you about the negotiations we've been conducting elsewhere. I'll talk about CPTPP in a moment, but we've recently done a call for evidence for Canada, for Mexico, and also we'd like to get back around the table with the United States as quickly as possible. But the Australia deal also contains the world's first ever dedicated innovation chapter in an FTA, which will provide a gateway into the fast-growing Indo-Pacific region, boosting the UK's bid to join the CPTPP, the Comprehensive Progressive Agreement for Trans-Pacific Partnership, that 11-country free trade area across 4 continents. That will give the UK greater access to some of the world's largest economies, populated by 500 million people, and with a joint GDP of £8.4 trillion sterling. And that deal, the CPTPP, features modern rules for digital trade, with digitally delivered services from the UK to its member nations worth £18.7 billion in 2019 alone. The benefits of our trade deals will not just be felt in London and the South East, but across the United Kingdom as a whole, which I know is one of the main purposes behind City UK, is presenting the UK financial services offer as being a cross UK thing, not just a London thing. Because as today's report highlights, 2/3 of the 2.3 million people employed in the UK finance and professional businesses, services industries are based outside of London. Many UK financial services institutions have relocated their BMO functions to the regions because they've found the skills and infrastructure they need elsewhere, plus lower overall costs compared with the capital. Recent successes include JP Chase's intention to build a new technology centre in Glasgow, TSB or Banco Sabadell's £120 million investment into an IT centre in Edinburgh, and Goldman Sachs' new technology hub planned in Birmingham. Which is why our team at the Department for International Trade is focused on encouraging and assisting ever more financial and professional business service firms based across all regions of the country to trade internationally. This strategy today also highlights our areas of strength. It's a great document. I'm sure everybody else on this call has read it. It's a very good, easily digestible and I'd say reader-friendly document. Highlights other areas of strength for the sector that we will seek to build upon, from risk management to environmental, social governance, and so on. This government will host leading investors at our Global Green Investment Summit next month, and we are working hand in hand with business to promote the UK's unique offer to address the world's climate adaptation and resilience challenges, especially as we have COP26 in Glasgow approaching this autumn as well. As we build a cleaner, greener, more sustainable British economy that is fit for the future. DIT, the Department for International Trade, is committed to working with the City UK and the financial services industry more widely to capitalise on these opportunities and help us to shape UK trade policy going forward. Now, I'm delighted that Miles Chelich sits on our trade advisory groups for both financial and professional services, providing direct input for our trade negotiation teams. This new international strategy is a welcome and timely document which complements this government's overwork to build a more diverse, dynamic, and nimble financial services sector. Trade is pivotal to this ambition, and we want UK financial services firms to lead the way in driving growth and innovation in this increasingly interconnected world, building new bridges of trade and investment. In my experience, having spent most of the last 5 years here at Department of International Trade, previously at HM Treasury, I can tell you that financial services is vital to our trade agenda. To be frank, services and financial services rarely generate as much public attention or controversy in trade agreements as, say, aspects of goods and particularly agriculture. But for the UK economy, trade and financial services is absolutely crucial. And that's very much the approach we take here at DIT and our colleagues at HMT. So finally, we're looking forward to enjoying the rich rewards that this promises to bring, and let's continue to work together to make sure that this happens. Thank you very much indeed.
Thank you very much, Minister. Thank you for those comments. And as you say, we should be working together on this really important initiative. It's a critically important time that we should be working together to strengthen the UK's financial centre. So, for those who don't know me, I'm Catherine McGuinness. I'm the Policy Chair at the City of London Corporation, the governing body for London Square Mile and traditional home to the UK's financial and related professional services sector. And it is a major focus for us to work on the competitiveness of the UK's financial and professional services sector generally across the UK in partnership with colleagues such as City UK. The UK's future international competitiveness relies on the creation and maintenance of an even better and more supportive ecosystem, building on our existing formidable strengths. And that, I suggest, is one of the core themes of the new strategy which we're discussing today, this new strategy developed by the City UK in partnership with us and the trade associations and others. And as you heard from Miles, we have a fantastic panel of esteemed individuals from across government, industry and academia to discuss some of the key themes with us. They need no introduction, but just to remind you, we have John Glen, MP, Economic Secretary to the Treasury, Lord Mandelson, Chair of Global Counsel, Kay Swinburne from KPMG and also Chair of the International Regulatory Strategy Group, and Dr. Linda Yueh, fellow in economics at St Edmund Hall, University of Oxford. And I'm delighted to see you all on screen. Just encourage, that's okay, thank you. Delighted to see you all here. Thank you very much for joining us. We only have 40 minutes or so and a lot of ground to cover. I'm going to tackle two themes, if I may. First of all, the overall UK offer, and secondly, the international competitiveness strategy. And I'd like to start by directing a question to our longest-serving Economic Secretary to the Treasury. John, we're delighted to see you pass that record. International competitiveness is central to the Treasury's new financial services strategy. Can you tell us how the Treasury plans to strengthen the competitiveness of the UK's financial centre and how you see business contributing to that?
Well, thank you very much, Catherine. Thanks for your kind words. It's great to participate in this panel with such experienced individuals alongside me. And, you know, as my colleague Greg Hand said, competitiveness is core to everything that we're doing. And when I think about the size of financial services, the 61 billion last year in terms of the export market, you know, we share your ambition to grow that. So in terms of competitiveness, the first thing overall I would say is that it won't be about deregulation and looking to race to the bottom, as some perhaps anticipated when we got to this point. I think of the Chancellor's speech at Mansion House on the 1st of July set out those four thematic drivers around openness, innovation, sustainability, and then, of course, competitiveness. So a few practical things that we're doing, reviewing the bank surcharge to recognise that we need to be competitive alongside the US and other significant jurisdictions. We're reviewing the VAT treatment of fund management to ensure that that's as fair and fit for the future as possible. And that often means me convening industry groups, and I know City UK and Corporation of London as well do a lot of work to facilitate the optimal conversations there. And then also we're looking forward to taking forward Jonathan Hill, Lord Hill's recommendations when it came to the listings review and specifically on the prospectus regime. So we've also got a number of other things that I'll briefly mention, if I may. We will be introducing a senior managers and certification regime for central counterparties, and that's strengthening governance standards at globally systemic firms. And then we will be building on the FSMA orthodoxy, if you like, with the future regulatory framework review. We're at the second stage of that, and we will imminently be bringing forward new proposals. And that will fundamentally reset the relationship, if you like, between the regulators, industry, Treasury, and Parliament. And I think, you know, will be very welcome as we obviously in a totally different environment. We've also launched a work stream on strong and simple regulation to look at the proportionality of the regulatory framework. And obviously that means for me as the Treasury Minister, and obviously the Treasury leads in financial services and the promotion of those in terms of exports. You know, there's a lot of work to be done with our regulators to get that right. We're also consulting on reforms to the regulation of the wholesale capital markets. My sense is overall that people are looking for modest incremental changes rather than radical change. And so I'm doing my best to steward that through deep conversations with industry. And then we're undertaking reforms of the prudential regulation of the insurance sector and the Solvency II regime. And again, that's going to be a very carefully calibrated conversation with the regulators and with industry that I think will give us an opportunity to make more capital available. So I think we will need massive ongoing engagement from industry, and I welcome the participation from industry and having, you know, numerous conversations that lead us to hopefully get these as right as they can be. And obviously, you know, legislation plays a part in that. Hope that's helpful to start the conversation.
Very helpful. Thank you very much. And turning to Kay, let's look at that question of regulation in a little more detail. You, in your role at KPMG, advise businesses on UK regulation regularly. From a commercial perspective, what areas are businesses saying that they want to see the UK address? to develop a globally competitive regulatory system?
So I think the Minister is right. From our work, we conclude that there is no desire for a mass cull of regulations. And indeed, I think the strength and stability of the UK's regulators is seen as a strength that needs to be preserved. So there's always room for improvement. And I think a common criticism is the notion that the UK needs to avoid gold plating when it comes to the implementation of those quasi-global standards that we participate in, but then somehow we often go a little beyond. So I think that's a really important one to look at going forwards, and maybe to have a little more scrutiny of when we're now an independent nation doing our own rules and our own implementation. But I think change for the sake of change's sake is not welcome. It needs to be grounded in best practice and supported by data and analytics. And I think if we start thinking of the UK finance as an ecosystem and addressing weaknesses or gaps, it seems a sensible place to start. And we're seeing that, of course, with what the Minister just referred to in terms of Khalifa and the Hill reviews, the wholesale market and funds regime consultations, and indeed that overhaul of Solvency II. So those are all big things, but we also need to address the principle of proportionality, something that we talk a lot about, but I think businesses really would like to see the full effect of that proportionality really coming to play. And I think we need to identify the changes that are needed and then implement them really quickly, which is what most of the firms that I speak to really want. So that full holistic review of the UK financial services ecosystem and all its component parts will be vastly complicated. I don't think that's likely to be concluded anytime soon, which means that the best way to do this is to prepare over time for a more competitive global marketplace looking forwards. So what are the new digital technologies advancing? What does new innovation mean for new products, new players in that regulated space? And importantly, making sure that the UK does things better. And that should be the consistent theme that we go with going forwards. And I think most of the global participants in the UK would be happy if that's the rule of thumb that we use in the future.
Great, thank you very much. And turning to Lord Mandelson, Peter, as a former Secretary of State for Business, Innovation and Skills, what steps do you think the UK can take to become or to remain the most attractive investment location for the financial and related professional services sector? Sorry, Peter, I think you're on mute.
Quite right. Thank you so much for asking me to participate in this, because as Europe's Trade Commissioner and as Britain's Business Secretary, I unhesitatingly championed Britain's financial services sector and have no hesitation still in doing so. Look, when I talk to international investors, they talk in the main about two things, not exclusively, but two things. One is talent and the other is tax. I mean, on talent, our financial services sector should have easy access to the talent it needs. I mean, the government claims that the advantage of Brexit is that the end of free movement from the European Union increases the popular acceptance of a more open policy for other kinds of immigration, that we can choose rather than be forced. Now, it should deliver on that claim for the city and associated services. On tax, this is frankly more difficult. It concerns the financial burden that banks are carrying at the moment. I personally welcome the Chancellor's announcement in the budget of a review of the competitiveness of banks' tax rates. The government's financial and regulatory demands on the financial sector are surrounded, as we know, by politics and the recent history of the global financial crisis. But I hope the government comes to a conclusion which will support the UK's attractiveness for investment as far as tax is concerned. Otherwise, if we think we can just safely sit on our lead whilst all around us is changing, we're going to, I'm afraid, be disappointed. We're going slowly to decline. Can I make one last point, though, about regulation? Brexit, well, obviously it brings many changes, not least to the end of in the end of passporting. But if we're smart, we can exchange weight for nimbleness. And Brexit changes how we are regulating financial services, because the EU's model of harmonization is that a lot of regulation is in primary legislation, which can be inflexible and slow, including very slow to amend subsequently. Now we have a chance, and I think this is very important, and I'm sure John is listening carefully. We have a chance to strike a different balance between primary legislation and secondary law or regulation in the UK, using the former to set core principles and the latter to define day-to-day requirements, will give the UK scope to be more nimble, more adaptable, to make changes subsequently when we see new opportunities and issues arising. We can evolve regulation, in other words, faster if we don't entirely depend on primary legislation as we've done before. For example, in relation to AI and fintech regulation. That's the system we're moving to, and that's what we should be taking advantage of in Britain.
Thank you very much. And you raise a number of points that I'll be coming back to in a couple of minutes, but I'd like to turn back to John. John, we understand that you and the Chancellor are increasingly taking the lead in championing the wider professional services sector and ensuring the UK's continued future as a services-led economy. Can you explain some of your thinking on these points?
Yeah, thanks, Catherine. Well, first thing I'd like to just observe, I agree with a lot of what Peter said there with respect to the opportunity of the way that we can move nimbly to codify some of these changes in a way that's much easier and more principle-based than where we were previously. And what I would say is that I'm aware, as the City Minister, of the conflation of skills around professional services and financial services. They go together. They constitute an enormous amount of our exports. I think if I think about legal and consulting, they make up about 35% of UK services exports. And so it's very important that the emphasis that TCUK puts on this is followed up by us in government. I think that what I would say is that, and I think Greg Hans mentioned this in his speech, often free trade agreements, as Peter Mandelson will know, are incredibly complex discussions. They take an enormous amount of time and resource. And we are, and I am, embedded in those conversations on all of those agreements in principle to ensure that those sort of flexibilities that really often it's about maintaining existing liberalisation and codifying that more formally. So we have made some progress there. Obviously, some of these were live, and we also get involved not just through the formal FTA process, but last week we had the economic and financial dialogue with India, looking at how we could open up more access to the insurance and reinsurance market. And we have dialogue with Singapore with emphasis on different elements. And so I suppose what I would say is that the ambition that DIT and BEIS have in terms of the outcomes with these free trade agreements, I think are complemented by us seeking to make those interventions that are really helpful across the agenda that has been mentioned in terms of the global business mobility visa that we'll have up and running by spring of next year. That will deliver on the outcome that we said that we would achieve in terms of that access to talent and the flexibility and speed with which professional services firms can expect to be able to employ that talent.
Thank you very much. And on that point, it's worth just flagging that City UK, together with EY and the City Corporation, have been working on a new report which will make some recommendations on how to help the industry access skilled international talent more readily, and that's going to be published very shortly. Linda, I'd like to turn to you and just ask, a question about a slightly wider framework. Looking at the global political, economic and trading environment, what are your thoughts on where the UK should focus its efforts to secure international alignment on key issues like climate change and digital governance?
Thanks very much, Catherine, and thanks very much to City UK for including me. I think your timing of this very, I would say, evidence-based and clearly set out strategy is it's topical, and I very much welcome seeing the mapping of issues. And indeed, one of the issues is around both what I would describe as global public goods, which is around the environment, and the other one is around global standards, and that's the data governance point, digital governance point. So because we live in a, just for the sake of conciseness, we live in an era of great power competition. So it's not, it's a reality that geoeconomics, that geopolitical issues will now be intertwined increasingly with economic and financial ones. So what this means is that a country's economic policy in the foreign sphere is going to have to be aligned with what it hopes to achieve in foreign policy generally, but most importantly, aligned with its own economic objectives while trying to steer through what is a very complicated global environment. But what this actually offers is an opportunity for the UK, because if China proposes something, America tends to be hesitant and vice versa. So there's quite a lot of scope for honest brokers, for countries which are coming in with technical expertise, with a lot of private sector input, trying to piece together a global regime, which is patchy at best. Clearly, quite a lot has changed in terms of digital trade. The main provisions at the World Trade Organization level date from the 1990s. And I think that's when the internet first came to popular use. And so it's very much, I think, an opportunity for the UK and like-minded countries to use this to begin to shape what a global digital regime ought to look like, positioning the UK as a result, as a hub, which I hope we can get into in a moment. And around global public goods, there's also a similar gap. And both of these approaches require plurilateral efforts. So we know at a multilateral level, in an era of great powers competition, it's quite challenging. But having too few countries is also not effective. So what it requires is countries that take a leadership position, building what I would describe as groups of countries that have a shared interest in furthering either global standards, furthering the area of the environment, standards for green finance, and essentially beginning to shape a regime by doing best practice and then hoping for buy-in from other countries, which is eventually how plurilateral effort becomes a multilateral effort at the World Trade Organization. So I think these are the areas where there's a massive amount that needs to be done. And when I mentioned there a moment ago, by acting, the UK positions itself optimally, I think it's pretty well understood that if you're a rule setter, the rules will tend to be pretty good for your country. Or I know Lord Mandelson obviously worked in Brussels. There's an old Brussels joke I was told, I don't know if it's true or not, which is, you know, if you're not in the room, you're on the menu. So if you know multilateral, so if you know plurilateral efforts are happening, it's best to be in the room and help set some of those rules. And I think for the UK, getting private sector input to prioritize the areas of the most gains, that's how we can use the strategy to position ourselves optimally. And I think your report today sets out quite a lot of areas where there's a lot of gains that could be had, given just the paucity of a lot of these global standards.
Thank you very much. Thank you very much, Linda. I'm going to turn to Kay next. And Kay, before I ask you the question you're expecting me to ask you, I'm going to highlight the question that Pete Horrell has put in the Q&A, mentioning the fact that some of the panel have written about deglobalization and the moves to more protective nationalistic governments. What issues does that create for the strategy, and what are the key coalitions that we need to build in order to overcome those? So while you're thinking about that, the question you are expecting from me is around sustainable finance as a key growth opportunity for the UK. And the International Regulatory Strategy Group, which you chair, has been doing a lot of work on that theme. How do you think that the UK could engage with international regulators and policymakers to shape a more integrated global approach to sustainability, which I suggest is where the key coalitions might come in?
Thank you, Catherine. And I guess occasionally an emerging theme develops that is truly global. And I think sustainability and the financing of the transition to a more balanced future is definitely one of those. So tackling climate change or facilitating the decarbonisation of our industries, ensuring and indeed assuring the ethical supply chains globally and measuring social impact is all going to have to be data-driven decisions. And so I think Europe as a whole, especially the EU and the UK, given we will remember when most of these standards were being set and targets were being spoken about, have led the way in setting ambitious targets to try and facilitate that change, and in particular the environmental change. And it's recognised that the source of capital is the way in which you can have the fastest and likely the greatest impact on corporate and individual behaviours. So if you go after the money, you're likely to have the biggest, fastest impact. So the UK has been leading the way in applying TCFD, especially with the Bank of England doing its stress testing on all the largest banks and insurers on their portfolios. And this data that the UK regulator now has is going to allow them, I believe, to shape that global debate and to devise truly useful global standards. So on corporate data disclosures, we are expecting an announcement later this month on the establishment of the new International Sustainability Standards Board, a bit of an acronym in ISSB, which is going to be set up on the same model as the IASB for accounting standards and under the governance of the IFRS Foundation, all an absolute alphabet soup. But the reality is that there is a chance we might have some global standards for those corporate disclosures, which will help all the financial entities and those who are involved in investment decisions to really have a base that they can compare the various companies throughout the world. And the UK, of course, is not only an active participant in the IFRS, which is based, the foundation is based in London. The UK is also an active participant at IOSCO in their working groups, the FSB on climate. And given the global challenges, I think this is the only approach we could be taking. So it's right that the E and ESG gets a lot of airtime, but the IRSG KPMG report that we produced this summer was about accelerating the S in ESG. And I think that's a really important addition to broaden the thinking. And I'm really hopeful that the UK regulators and the financial sector participants are going to play an increasingly significant role in advancing this broader agenda to include the S in E and indeed show the best governance we can too. So lots going on, but the UK can shape and will be shaping, I hope, much of this.
Great, thank you very much. And I'm coming back to you, Linda, if I may, back to the question of data. And how do you think that the UK's trade policy can best ensure open trade in data and help the UK become an attractive global data hub?
Thank you, Catherine. I think three things. And one is a strategic approach. Two is what we can do unilaterally. And this third is, it's always dangerous when you say three and then you think, do I remember the third? The third is this coalition building approach. So let me start with the strategy. In order to become, well, really anything requires strategic positioning. That's why your report today actually is very well timed. So what we know is, and people used to say this, and I used to think, oh, what do they mean? The 21st century is data. Yeah, the 21st century is data. The 21st century global economy is different than the 20th. And one of the biggest differences is that the fastest growing area are digital trade and services. And they all enable each other. So we heard from the minister earlier, not this minister, John, but Greg earlier, that 50% of services and more could be digitally delivered. Increasingly, improving services liberalization actually improves by up to 50% in the value added of manufacturing trade as well. So they're all completely interlinked. So the reason I'm stressing this is that for the UK to be a hub for digital is within our grasp if we position ourselves. So in other areas of trade, for instance, manufacturing, there could be this skepticism that the UK could be a hub because gravity models tell you that geography and where things are actually manufactured are elsewhere. But digital trade and services, some services, is actually what we call the invisible balance. It's intangible. So that isn't actually affected by anything except for having great regulatory norms, standards, expertise, and the kind of ecosystem that makes people want to channel trade through the UK via our trade agreements with other countries. And not just, I would say, big trade agreements, but services agreements and digital agreements. Because this minister, John, mentioned that a lot of these are extremely, time-consuming, and FTAs can be, and they're very complicated. But the UK's approach of taking some, with Singapore, looking at digital, by looking at regulatory dialogues, you can actually narrowly begin to open up with private sector input into specific areas that begin to build a bigger picture of standards that could eventually become global. So it doesn't need to be, it should be embedded in free trade agreements, but some agreements can be more nimble than having a massive FTA. So I think that actually was the third point that I was going to make on this. We'll come back to the second point, which is because we know of the impasse at the multilateral level, it's actually even more important for plurilateral approaches to align with what it is that we're hoping to do on a bigger picture basis. You can't get everything done through the WTO process. What you can do is build blocks. And if we have enough of these blocks, and we are literally sitting at the center of overlapping agreements. So for instance, two countries that don't have agreements with each other, but we have an agreement with them, for instance, EU, US, we are actually the hub. By working through the UK, you can actually then access these markets in services and digital trade. And this is how you begin to position the UK in a plurilateral world, all the while thinking about how you can make it a multilateral effort. So then finally, unilateral effort is very important. So a lot of comparative advantage in trade, it doesn't come through because you want it to be so. It comes through because that is your competitiveness. So there's quite a lot of unilateral efforts in making sure, for instance, our regulation is the best in class. You describe in the report the highest common denominator. I think that's a very good way of putting it. We should have the best digital infrastructure. We should have the most secure but easiest ways of facilitating things like e-signature so that it's seamless when you work, when you do a deal and you process it by including the UK in your negotiations, in the way that you want to invest, in the way that you want to trade. And unilateral efforts around talent, around capital, all of these things, the country that could position itself, really, this is the market at the moment where lots of different capitals be vying for it. And financial services has a massive role to play in this, because when I describe services that are just delivered, what I call pure services, financial professional services, really come to front of mind as being able to exemplify this. And then you can get onto some of the harder things, which is when it becomes embedded in manufacturing. So I think unilateral liberalization, investment in our competitiveness, plurilateral approach to positioning ourselves as a hub, and most importantly, have a strategy to get us there.
Great, thank you very much, Linda. Then turning to this strategy itself, back to you, Peter. The new strategy sets out how the UK's position as an international financial centre is under increasing threat from other financial centres and warns that we must avoid complacency. How do you see the current global position of the UK financial centre, and what key challenges and opportunities might we encounter in the years ahead?
Catherine, let me turn to that in a moment, but before I lose it from my head, can I just offer a postscript on financial regulation? It is very important to our competitiveness. I'm not saying that UK financial regulators are anti-innovation. They're not. My feeling, however, is that they are a bit let's continue to do what we've always done in the way that we've done it without thinking whether we can do it differently and better. And I think that they should take a leaf out of the health and medicine regulators' book. You know, during the pandemic, regulatory processes that took 9 months and more to complete have been done in 9 weeks, you know, without any harm to any individual's health. And I just think the government should do a bit of spot checking about how long it's taking to approve and license innovators in financial services. Because I think they might be shocked by this sort of business as usual, slight sort of ivory towerism that it continues to exist in some parts of the regulatory landscape. Can I just say also on trade, sorry to jump around, I very much agree with what Linda was saying. You know, far be it from me to argue against negotiating free trade agreements, as I did so as my life for 4.5 years. But there will be many more opportunities for regulatory, or what I call commercial diplomacy, country to country, which, you know, just allow you know, a faster, more simpler approach and may provide some gains for us. I mean, at the moment, I mean, the global climate is sort of more protectionist, and that should worry us. And the truth is that negotiating the liberalization of services has always been harder than in the case of goods. Goods are essentially about disarming tariff barriers. That's much easier to do through negotiation than negotiate the changes to an entire regulatory system and structure through, heaven help us, a free trade agreement. I mean, unregulated services are different, obviously. So IT services, advertising, design, consultancy, communications, these are growing as cross-border services, and they're things that we're very good at. But financial services, as we know, are very regulated and therefore more difficult. So while some of what we see in barriers to cross-border trade in financial services is protectionist, frankly, some is more understandable prudential regulatory caution at cross-border supply, and some is just the result of regimes that have just not really thought of doing or not really tried to be innovative in thinking about whether they should be more pragmatic and permit cross-border supply of certain services for their own economic benefit. So this picture consists of sort of protectionists. I'm talking about the world now. It consists of protectionists, prudentialists, and potential pragmatists. And I mean, in answer to the protectionists, obviously we've got to make the same arguments that we're familiar with. With the prudentialists, we probably have to recognize that the UK exports will mean foreign establishment, and we should be working with trading partners to make this as simple as possible to ensure that UK firms get the same treatment as domestic ones wherever they're set up. And that we can do, as I say, through regulatory and commercial diplomacy. And then we've got to look to, you know, the potential pragmatists, you know, the Switzerlands of this world, perhaps the United States, even hopefully one day, you never know, you know, the European Union. But the sort of big elephant in the room, of course, is China. And I don't buy all this stuff that the Chinese are seeking to decouple their capital markets. All my contacts and conversations in China suggest the opposite. Now, obviously, you know, it's not straightforward for us with China because, you know, we not only have economic and commercial interests in China, but we have security and geopolitical ones as well. So whilst we cannot take an economics only approach to China, there are opportunities for London as one of the world's two great financial centres. And we don't have to take the same approach, in my opinion, as the United States. I thought the Chancellor signalled that in his Mansion House speech. You know, we don't have to see China in quite the same way as the United States does as its rival across the board for global preeminence. We can offer China openings that the US chooses not to. And I don't think we should be inhibited in doing so.
Thank you very much. And Kay, turning to you, the international strategy focuses on growth opportunities outside the EU, but recognises that the EU does remain a very important market for UK businesses. Where do you think the UK should focus its efforts on building a positive trading relationship with the EU in the medium to long term? And I give you 2 minutes on that.
So I love Peter's protectionist, prudentialists and pragmatists, and I just wonder where I would actually put the EU within that sphere when it comes to financial services right now. And I know where most of my former colleagues in the EU would say they were, that they were definitely in the middle category, but I wonder whether they are actually veering towards the first category of protectionism with their strategic autonomy. So we've spent a lot of time as an industry discussing what I consider to be strange and inconsistent concepts of EU equivalence over the last few years. You know, equivalence means different things for different people, and in different pieces of legislation, it means something completely different. But we talk about it as if it's a holy grail, and I think it's detracted us from the wider discussion about what the future of financial services is going to look like, who the future providers are going to be. So, you know, does the notion of a location policy hold up in a more digitized world? And I think Linda's probably got better views than I have on that. But I would suggest that, you know, the G20's ambition back in 2009 to steer derivatives clearing to centralized venues, concentrating the risk and its management, can that withstand territorial ambition when somebody actually wants to host their activity for commercial gain? I don't know, and I suspect probably not. But, you know, does it mean that that centralization of the risk was a good thing or a bad thing? I still think that it stood the test of time. You know, there's a good reason why you centralize it. So rather than chasing a political decision about what equivalence decisions are or could be made, I think we should be encouraging greater regulatory collaboration. And that dialogue, that diplomacy through regulators is really powerful. So I think we should be turning towards that type of cooperation, as well as increasing that regulatory dialogue and the exchange of information. I think we could concentrate on innovation and new areas that are emerging, such as the collaboration on sustainable finance that we talked about. And certainly the report highlights those areas. You know, green financing is something we've got much more in common with the EU than we have differences. So establishing a framework for future regulation is a really good thing to do, and including things like how do we regulate new disruptors outside the current financial services regulatory perimeter. Those are all things we should be looking at. The forward-looking agenda, I think, is more likely to build the bridges quicker and establish that trust, rather than actually going back, harking to existing regulations that are bound to deviate. You know, there are inbuilt regulatory reviews into every piece of EU regulation I've worked on in financial services. That means that you end up with differences as you do those reviews when the UK does them, when the EU does them. The UK market is now bespoke. And, you know, the EU itself is a commingling of 27 systems and 27 different countries' needs. So rather than focusing on the challenges and the differences, I'd be looking to ensuring high standards, genuinely looking to outcomes, and trying to really cooperate on those new fields, new technologies, and the disrupting players that emerge, because I think that's going to be much more important than tweaks to monitoring the status quo.
Thank you, Kate. Now, this is a fascinating discussion. We're rapidly running out of time. Linda, can I give you just 2 minutes? You've previously said that UK businesses are well positioned to service a rising middle class in developing markets, but that an upgrade in the global trading system would be needed to make the most of those opportunities. What do you think needs to change as a priority, and what role should the industry play? And I am sorry, just 2 minutes, because there's one more.
No, of course. You've done a brilliant job moderating. I think the probably two things that industry can help with. So one is identifying non-market measures, and there's been a change in term, which is important. So non-tariff measures as opposed to non-tariff barriers. And what that has done is that it's normalized the fact that different countries have different regulatory regimes. And it is a reflection of this growing protectionism. So the market in terms of the new global middle class is absolutely huge. I have written quite a bit about it, that within about a decade, for the first time, more than half of the world will be middle income status, earning between $10 to $100 per day, adjusted for what a dollar buys in their country. Now, 2/3 of those will be found in emerging economies in Asia. So what happens when people enter the middle class is they demand services as well as consumer durables. So the UK is the world's second biggest exporter of services. We can provide financial services, we can provide advice, we can provide insurance, all of these things. But we've done pretty well without the market opening that you expect that ought to be there to govern this fast growing part of the market, but it isn't there. And so that's what I mean by private sector input to help open up and address non-tariff measures. And a lot of that will require, I think, again, coming back to more nimble service market opening negotiations. So not everything, a lot of emerging markets are very sensitive around agriculture and indeed around manufacturing, though generally speaking, Peter is right, a lot of those tariffs have come down a lot. But around services, they're trying to grow their market. So it's about competing, it's about investing, it's about helping them develop that with our expertise. And again, because we're not the United States, who is the biggest exporter of services, that actually is not a bad thing in a world where there's a lot of geopolitical tension between the US and China, leading to unnecessary barriers at times. So then finally, I think the other bit where industry can help is that they can help support the opening of markets through trade liberalization, but stressing that it's trade that's not just free, but it's fair and it's green. And again, the UK is well positioned to do this because our reputation is we have a fair regulatory system, we have expertise in the green area. So ultimately, access is about support and knowing there's a backlash. Policies need support from private sector as well to show that by opening these markets, it's good for our country, it's good for their country, and because it's fair and free trade and not just free trade. So I think the shift is important to get buy-in as well. So I know we're out of time, so I'm going to pause there, but I do think we are very well positioned for what the 21st century economy looks like. I think we just need to capitalize on it.
Thank you very much. And I'm just going to turn, John, this is probably unfair. I'll give you literally 60 seconds for any final remarks you want to make.
Thank you, Catherine. I think there's a lot of agreement there. The truth is, in financial and professional services, we have a variable geometry when it comes to the trading relationships, the levers that we have, the opportunities that we have. It's fast changing as well. We have a clear heritage within the EU, but we have some great opportunities that arise from the freedom that we now have. I take on board all the comments around the challenges to shift mindsets into a new place. I think we have the right environment in terms of the Financial Services Trade Advisory Group and numerous other consultative bodies at the right level to try and implement and make the interventions. On that vital issue of talent, which I'd just like to finish on, which I think is so important, with the global mobility visa and the intra-company transfers, we have opportunities to execute in a bespoke way to suit the needs of industry. And this is something that we shall look at. And as was mentioned, the Chancellor set out very plainly the need to have a principled but pragmatic approach to our relationships with multiple jurisdictions, and that includes China. I hope that is an adequate summary for you.
Perfect, and you kept to the minute. Thank you very much. Look, can I just thank this great panel? We could carry on we really could carry on, but we've run out of time. Thank you very much to the panel. Thank you very much to the other speakers and to City UK for holding the pen on this excellent report, which I really recommend that you all read carefully. We should be optimistic. I think we can achieve a great deal together. And I look forward to working with the City UK and our other industry partners and government as we take this really important strategy forward. So thank you all very much, everybody. Thank you.